View on the market performance, bit of bargain hunting going on?
Well, in the month of May, we've really seen a strong selling theme coming through. In the month to date, the market's down 2.2%, and it really has been a theme of sell income and buy some growth. And we've seen a little bit of that reversing today, and it's no wonder we have seen a strong selling in income and yield type stocks in the month to date because of the volatility that we've seen in bonds. Today, we did see bonds moving back upwards and yields moving back down. We saw the same overnight. We saw that in the Asian session. So that had a good flow-on effect for some of the big yield stocks like most of the banks as well as Telstra. And just to show you how strong that correlation is between the yield trade and bond prices, let me just bring up a few charts. And I want to just show you first of all Commonwealth Bank, one of probably the strongest yield trades on the market, versus Australian fixed interest. And this is just over the 2 years. And to show you, Commonwealth Bank is in black and we've got the bond market in green. And I can do that with Telstra as well. You're going to see the same type of thing. This is Telstra over the last 2 years against the Australian Fixed Interest Index. And if we have a look at the market in general, you can see that, of course, market performance is also linked with where bonds are. So no wonder that the volatility that we've seen in global bonds has really had an impact, not only in terms of asset prices, but especially in terms of that yield trade. I guess looking at bond yields and where they're headed and bond prices, although the US is expected to raise interest rates in September, we are still expecting to see a low growth, low inflation period for a long period of time, and that means that that yield trade will still be sticking around. So nice to see a little bit more buying in terms of some of those income trades which have been pretty unpopular during the month of May. We did see a strong bounce back in most of the banks as well as Telstra.
James Hardie today because, of course, you know, it obviously is price sensitive as well to currency moves.
I mean, there wasn't much not to like about this result. You saw strong income coming through with that dividend as well as the special dividend and growth numbers coming through as well. If we have a look at James Hardie, yes, it is a cyclical stock, but we've seen some strong growth coming through. Net operating profit up by 26% for the quarter, up 12% on year. Now, if we have a look at this company, it's the largest fibre cement manufacturer in the world. And if we have a look at US fibre cement sales, up by around about 13%. That's significant because the US sales makes up more than 80% of sales and revenue for James Hardie. And of course, the outlook's important. So forecasting that housing starts going to grow from 2014 levels where they were at 1 million, expected to grow to 1.1 to 1.2 million. So expecting to see more growth. That's important because around about 50% of James Hardie's business does come from new housing dwellings. So that's going to be supportive in terms of its business. But altogether, that dividend, I mean, 27 cents plus a special dividend of 22 cents on yesterday's closing price. Remember, this is just a half dividend. That's a yield of 3.2%. So pretty amazing in this type of market.
Michael, what point? I mean, we are seeing the iron ore price, as we mentioned, continue to come off. Then you see this deal with Vale versus China, well, Vale and China combined. What's your view?
And then you see Fortescue's share price up by 2.4% and Rio Tinto up by 1.6%. So we've seen that news out of Vale. We're going to see capacity out of Brazil and out of Vale increasing by 36% up till 2018. But altogether, I think for China, this is about security of supply. If we have a look at iron ore imports, Australia accounted for 59%, whereas Brazil accounted for about 18%. So Australia still does account for the bulk of the iron ore imports that China has. But of course, if we have a look at iron ore prices today, the Dalian futures up by 2.7% during Asian trade, and that suggests the 10-day fall that we've seen in iron ore is about to come to an end in terms of spot prices tonight. So we did see a big bounce in terms of those iron ore miners. Rio up by 1.6%, Fortescue up by 2.4%. And that's on a day when we did see these bad news come out. We saw the news around that deal with China and Vale, where China will be providing a $4 billion loan, buying those 4 ships plus 4 more, so that's more revenue coming through. And then, of course, being the buyer of that iron ore as well. And then we saw those flash PMI numbers coming in slightly below expectations. It means a contraction in growth in the manufacturing space. So it doesn't mean the manufacturing sector is contracting, but we did see those growth rates slowing down in that manufacturing space. But the market shrugged it off.
Yeah, market.